All right, everybody, John here, Crypto Top 10, coming at you with some of the trending articles in the crypto news space for October the 23rd. Bit of a shorter episode today. Got some stuff going on I need to get back to. So, without further ado, thanks to all those who have subscribed, and there's a link or links down in the description that you can check out so that way you can read all these articles for yourselves. So let's dig in to the trending articles. First up, Stellar's got some big things going on. So the Stellar Development Foundation, or SDF, has released an extremely important update for users of the Stellar Lumens public blockchain. According to the release, the update was scheduled to implement Protocol 14, but we're talking about 15. They're skipping it. So the SDF found critical bugs in Protocol 14's update, and after the deployment of Protocol 14 to the testnet at the end of September, so they didn't. Sounds pretty smart. After finding a solution for the bugs, the SDF deployed them to the testnet. The solution was deployed on October the 20th, so just a couple days ago, and they named it Protocol 15. A step was taken to avoid any confusion and to verify that all validators are running the updated version of the Stellar core. So that way someone, somewhere, somehow doesn't accidentally download the wrong Protocol 14. They just called it Protocol 15, and we're not going to do Protocol 14. Makes sense to me. They could have done like 14.5, but yeah, skipping over to 15, yeah, whatever. Splitting hairs on that one. I could see the logic behind it, so why not? So the new features already announced for Stellar will be implemented with the deployment of Protocol 15 on the mainnet on November the 23rd, so a month from now. The SDF has requested the cooperation of users and urged them to upgrade. They're going to make sure the versions are backwards compatible, and they'll continue to support the current version of the Stellar protocol. But when they release Protocol 15, they're going to be deploying claimable balances and sponsored reserves. Now, this article doesn't really go into depth on either of those aspects, so if you're a bit more interested, claimable balances, sponsored reserves, you have Google. Go. So after the update, developers will be able to create simpler, better user experiences that abstract away the complexity of the blockchain and do it without losing any of the advantages of a fast, cheap, and permissionless public ledger, said the SDF about this upgrade. So a little PSA for you and a little interesting note. They were going to put on an upgrade that would have killed the protocol, so they put out the correct one. It's amazing what businessmen can do. All right, well, moving on. Filecoin and Tron and Filecoin beefing it out again. I think Justin Sun just does this to get Tron's name in the news. All press is good press, that type of thing. So Justin Sun, Tron CEO, has accused Filecoin of being a, quote, scam platform after 1.5 million of the FIL tokens were sold for $300 million. His claim is ostensibly that the Filecoin team are the ones who dumped it on the market to reap their money. It caused the price of FIL to drop to $60, which affected miners and the community. In his tweet, Sun tagged the U.S. Securities and Exchange Commission, the inventor of Ethereum, Vitalik Buterin, and Juan Benet, who is the head of Filecoin. Sun asked the SEC to hold Benet accountable under U.S. regulation. Yeah, again, I think he's just doing this for the memes. He did say everyone in Filecoin, including miners, investors, and founders, should follow linear vesting rules. Breaking the vesting rules has serious legal and compliance consequences. Do you really think dumping like this is okay? Again, he's insinuating that the founder of Filecoin, Juan Benet, or his team, dumped $1.5 million worth of their own token on the marketplace to tank the price and get a quick $300 million. Don't think they actually did that. Why get 300 million now when you can build a cool protocol and have 3 or 4 billion later? just my opinion. Benet has denied Sun's accusations and that he or the Filecoin team dumped the funds onto the market. Instead, Benet published several articles accusing Sun of being a bad actor. Again, he has a reputation for being a troll, a hype man. So this story kind of plays into those archetypes of himself. It's kind of like the boy who cried wolf. Sun's been acting this way for so long that even if he actually is telling the truth about Filecoin, people like me are going to see it as just another stunt. But in addition, Sun was accused of having a financial interest in, quote, doing harm. There's speculation about Sun launching a Filecoin fork. Therefore, the tweet might be part of a strategy that would lead to the justification of the launch of an alternative platform. Boy, that would be really transparent if that is what he was doing, and this article writer figured it out. Suppose it's possible. It does seem to be true that the expected launch of Filecoin's mainnet has been pretty full of controversy. Yeah, there was an alleged strike of Chinese miners because they had a strong investment with the expectation to recover it after the deployment of the mainnet, but the operation of the Filecoin platform has not favored them. That aforementioned vesting strategy is partially to blame for that. We actually talked about this in yesterday's video if you want to pop over there next and check that out. They're just going on strike and shutting down all these brand new miners that you just bought or converted over to mine Filecoin doesn't make sense to me. So it's probably just a slowdown because they weren't making as much money as they thought they were going to be making. Not a coordinated strike, but that's just my opinion. Tron and Filecoin do have some bad blood. Justin Sun has been accused of stealing the white paper of the interplanetary file system back in 2015 and basically plagiarizing it for a Tron's version of it. Again, not exactly something he hasn't been accused of before, so either way, two big boys in the crypto space are fighting each other like a little girly slap fight, so is what it is. All right. So Paul Tudor Jones, he's a famed Wall Street investor, and he is talking about Bitcoin. So he said that he likes Bitcoin, quote, even more than I did then, referring to his initial investment announced back in May of this year. He praised Bitcoin on CNBC's Squawk Box, revealing that he holds a small single-digit investment in the asset, so not much. But he does feel that it has one of the best inflation trades when compared to traditional options like gold, treasury inflated protected securities, copper, and other more complex strategies. He's quoted as saying, Bitcoin has this enormous contingent of really, really smart and sophisticated people who believe in it. It's like investing with Steve Jobs and Apple or investing in Google early. I like that sentiment, and I know those of you listening do too. Paul Tudor Jones isn't just some guy. He's an industry veteran. He rose to fame for correctly predicting the 1987 stock market crash. And following his earlier statements, Bitcoin community buzzed with excitement due to his endorsement. Some predicted that Jones would soon become the largest Bitcoin holder. It doesn't seem to be that's the case, but he is saying some positive things about the asset. Now, if we could only get Warren Buffett to buy in, and then we'd just be there. That was sarcasm, okay? Don't be atting me in the comments. So, some see Jones's endorsement as a potential icebreaker for some more institutional investors. I think the ice is already broken. He's just chipping away at a large chunk. But yeah, they might feel more confident investing in the asset class after familiar names have already made the leap. And that's the idea. Once a few big boys do it, the smaller fish, who are still substantial in the grand scheme of things, will be like, oh, well, he's getting in. I guess I'll figure this out and get in too. That makes sense. But even more PayPal news. So, Bloomberg is now reporting that PayPal, fresh off of yesterday's announcement that propelled Bitcoin to 2020 highs, they're interested in buying more crypto companies. So Bloomberg specifically mentioned BitGo, which is a company that provides digital asset custody in the form of cold storage vaults as well as multi-signature digital wallets. They cited unnamed sources who indicate that talks are in progress and that PayPal's eyes and pocketbooks could go elsewhere. So they're interested in BitGo, but they're not married. They can play the field if they want to. It makes sense to me. The digital payments behemoth, and a behemoth is an absolute correct description. It would begin allowing customers to buy and sell Bitcoin, Bitcoin Cash, Ethereum, and Litecoin on its platform just yesterday. Though when the feature launches, it won't allow customers to withdraw the funds into their own wallets yet. So that functionality isn't what PayPal would be looking to BitGo for. The Silicon-based company, which applied this year to become a regulated custodian in the state of New York, the hardest state to get anything going in crypto-wise, is geared towards storage and custody for institutional clients, not individuals, but it could still be another sign of PayPal getting ready to dip their toes into the water. The addition of BitGo, which claims to process, quote, 15% of all Bitcoin transactions, so a pretty substantial amount. PayPal is partnering up with Paxos, so that way it can do all this stuff as well. But acquiring BitGo would provide further evidence that it's ready to play, which those of us in the market are pretty happy about. Yeah, just my opinion as well. But opinions of others. So what are traders expecting? Well, PayPal's crypto announcement is already adding to Bitcoin's momentum. Bitcoin has been on the uptick throughout the year. Dan Schuman, president and CEO of PayPal, confirmed this, and it's only just pushing things into the stratosphere. They are eager to work with central banks and regulators around the world to offer support and to meaningfully contribute to shaping the role that digital currencies will play. And words like that have pushed Bitcoin, which has already been rising higher and higher as more and more institutional investors get into the space. Sui Chung, CEO of Benchmarks, is quoted as saying, Bitcoin passing 13,000 today, a 16-month high, demonstrate that this trend is only picking up pace. PayPal, a household name, has received a conditional bit license, is likely propelling bullish sentiment. Today is significant as a signpost for future price appreciation in the future, the point by which mainstream media and, quote, mom and pop, unquote, retail investors may soon start to show interest in the asset, just as they did in late 2017. We all know what happened in late 2017. If you're watching this and you don't, Bitcoin went to $20,000, which is the highest it's ever been, before crashing back as the hype faded away. But part of the contributing factors to this is Bitcoin dominance is rising. Over the past week, they've outperformed all the altcoins, decentralized DeFi tokens, and Ethereum, though Ethereum is still doing pretty well right now. And then on the weekly mark, Bitcoin is showing a bullish frame structure. So their weekly chart has shown a breakout and surpassed the previous local top, which was achieved in August and throughout October. Traders have pinpointed this favorable technical structure as well. Good. In the short term, though, people are saying the market will probably cool down after such a strong rally. Some were saying that they expect Bitcoin to retrace back to 12 to 12,200. Though currently right now, as I'm recording this, Bitcoin is still over 13. It did dip back under for a little bit. So it remains to be seen whether or not it'll maintain. Personally, at this point, if Bitcoin can maintain 13,000, sweet. If not, which I don't expect it to, I expect it to retrace back to the 12,000s. Makes sense to me. Let it cool off. People take their profits. Everyone claps for a job well done. And we let the technicals and the strength of Bitcoin's network take us into the future. So there we go. Alrighty, well that does it for the trending articles in the crypto news space today. As I kind of said at the top, it's a bit of a slower news day, and I kind of got stuff I need to be doing. But let's take a look at the top 10 coins by market cap. Ooh, and just as soon as I said it, Bitcoin dips 12,995.97. Womp womp. Let's refresh that once again. Oh, there we go. It's over. It's 13,018 cents. We're just going to leave that there then. Ethereum is up 4% on the day, about 414 bucks. Chainlink's up 8%, clipping that $12 range once again. Good for them. They have been fighting. Biggest loser on the day actually looks to be Bitcoin. It's technically down, though it's up 13% on the week. In terms of the biggest winner, Ampleforth. Haven't talked about Ampleforth in a while. They're up 18.29%. Good for them. Biggest loser, Filecoin, down 13%, all the way down to $23.77. Boy, that sell-off they did. Hope that $300 million was worth it. Crypto.com coin has been tanking because they cut the reward. But yeah, that will do it for everything. If you've made it to this point, thank you. I do appreciate those of you who listen all the way through. Please subscribe if you haven't. And as a little personal update, tomorrow I'll be a dad. So cool. We're going in for the C-section bright and early Saturday morning. So we'll see if I publish an episode on Monday or not, depending how the wife is doing. We might still be in the hospital, so hopefully I see you guys on Monday, and if not, Tuesday, maybe Wednesday. So, peace. Stay safe.